Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Raghav Garg, Research Analyst, Institutional Desk at Nirmal, joining in. Raghav, welcome to the show and pleasure to speak to you as well. Raghav, my first question coming to you is a lot of expectations from budget which will be announced on the 1st of February, taking the unprecedented times into consideration. On a broad base, what's your key expectation for the BFSI sector?
So we had the institutional department had put out a report last week. So in that we had put out our expectations as far as the BFSI sector is concerned. So broadly, we there are a few things that we are expecting. So first is that we do expect a government to take some measures to incentivize credit flow to you know to the large industries especially in order to revive the private capex, which has been muted for some time now. So that is, I think, one of the strongest measures that they could take in order to sort of uplift the economy further. Going ahead. The other thing that we're expecting is that if you look at the PSB space, then they are quite starved for capital. So that is another measure which the government could take and should take, which is to capitalize the public sector banks further in order to strengthen their balance sheets in order to deal with the
Hmm.
NPA surge that is expected. We are also expecting that they would take some measures to ease the funding constraints that are currently being faced by some of the medium and small NBFCs. Because these NBFCs do play a critical role in directing credit flow to some of the marginalized sectors in our economy. So that would really help from an overall economy point of view. In terms of the insurance sector, this thing comes up over and over again that the FDI in the insurance sector may be increased. Currently, it's 49%, but taking it to 75% would definitely help. So that is another thing that we're looking at. However, I mean, it's a regulatory call. I can't really, say whether it's going to happen or not. But yeah, if it happens, then that would be really good. Also, I think the GST rate on term plans is about 18%. That's quite high. So any reduction there would definitely help. In terms of increased sales of term insurance plan, and would therefore help improving the penetration of term insurance in the country. On AMCs, I think there is still, I mean, there have been measures taken in the past to improve participation in the debt capital markets. So I think we're not expecting any right now. We don't have anything specific in terms of expectations on that front. But yeah, I mean, generally, more measures on the same would be good.
Right. So with these are broad-based expectations that we are looking at. Now, with regards to credit inflow as well, as you already mentioned, that
Mm-hmm.
incentivizing credit flow is something that needs to be taken into consideration because the entire reliance right now is on government capex because private capex has completely dried up. Now, how important do you think is it to revive private capex? And do you think credit inflow is one of the major concerns why private capex has dried up?
Yeah, so if you look at the latest data, then the bank credit growth on a YY basis is around 6.5%, which has improved sequentially, but given the historical rates that we've seen, it's definitely on the lower side. So if you look at the retail data per se, then I think that has been doing well. It has picked up and is expected to do well, partly because of the auto and housing loans, which are doing really well given the low rate environment. Also, the credit card and personal loan penetration in India is fairly low compared to some of the other countries. So that should also continue to grow at a fairly healthy rate going forward. With respect to the corporate credit, corporate bank credit, if you look at the data with respect to term loans, there hasn't been any meaningful growth in the industry credit. The it has mostly been the working capital loans where the banks have focused. This is also because so that is because there hasn't been any growth in the private sector capex. So I believe whatever capex has taken place in the country has majorly been undertaken by the public sector entities. The other thing is that if you go by the RBI data on India's capacity utilization, then it's at around 69% for Q3 FY20, which we can say was a fully normalized quarter. So given those sort of utilization levels, I think that explains why private sector capex has been muted. The other thing that I wanted to point out was that if you look at the whole corporate sector bank credit, there are only a handful of sectors, roughly about 8 of them, which contribute to about 70 to 80% of the total corporate bank credit in India. And if you go by what the largest companies in each of these sectors are saying, you would understand that the whole corporate India is on a deleveraging mode. I think the only sectors that where I see debt levels increasing is maybe power and non-ferrous metals. Third point and last point is that given the low rate environment, the bond markets have been much more attractive for at least the top rated entities. So these are some of the reasons why we are seeing a muted corporate credit growth. I think the only thing that the government can do to help revive the corporate credit is, by providing some incentives that would revive the demand to such an extent that corporates would be willing to undertake capacity expansions, and I think that then should drive the demand for credit. So that's the whole take on the overall the credit bank credit scenario in India so far.
Right. And then with this, another aspect is with regards to whether medium and small NBFCs are concerned. Now, they do play a crucial role right now in directing credit flows to small businesses and individuals as well. And they are the ones who are really struggling with liquidity and funding constraints, especially. And I mean, you have COVID, which has come in, as a deterrent on that front as well. Overall, do you think that the government would take any major measures towards these?
So if you go back to Q1 and then even in Q2, I mean, the RBI did announce, policy measures, the TLTRO, wherein they specifically those schemes or measures were meant to, relieve some of these smaller and medium NBFCs of the funding and liquidity constraints that they had witnessed post the lockdown. And, I mean, this was something that was already brewing up since the ILFS crisis. So there were some measures that were announced in the last calendar year. I would expect something on the similar lines because you still have some of these small and medium enterprises, non-banking finance companies, which are, still facing some of these funding issues. Partly because the reliance on bank funding is extremely high, and banks would rather go for safer options right now rather than being a bit too aggressive in risk underwriting. So I think there could be some measures on similar lines. Hard to say what exactly, but yeah, I mean, given the role that these non-banking NBFCs, non-banking finance companies play in directing flows to some of these smaller businesses and individuals who are neglected by banks, I think there should be some measure by the government to ease their funding constraints.
Right. And then beyond that, if you talk about on the asset quality front as well, overall,
Mhm.
on the back of the moratorium that has been provided, etc., we've not seen a major impact that has come in on the asset qualities of the banking financial institutions. However, the expectation is that over the next 12 to 18 months, that's when we will see the actual impact. So, do you think something needs to be done on that front as well? Because again, a bad bank has been in the offing since quite some time. However, no resolution has come out on that front.
Yeah, so I think on the asset quality or the NPA formation front, the moratorium is what they, provided, which was there up till August 31st, and then post that the Supreme Court order came, which basically froze the NPA recognition. But if you look at the underlying trends that have been reported in terms of asset quality by, say, HDFC Bank, even Federal Bank, which came out with its numbers, and some of the other banks which have reported numbers. So there is definitely a surge in NPAs. But then the good thing is that this was kind of expected, and the banks had started providing for the stress from Q4 FY20 onwards itself. So I think from a PNL point of view, the banks should be in a fairly comfortable position, because the what the ultimate losses are, only that should matter. So from a ultimate credit loss point of view, the stress, I would say, is largely provided for. And I do not expect any more measures, to alleviate the NPA stress right now. Maybe something, not something very significant, because if there had to be any measure, then it would have come out by now. They wouldn't have waited for the budget.
Right.
Plus, also, if you look at the collection efficiency trends across various banks that have reported numbers in September quarter as well as in December quarter, the trends are encouraging and they are improving.
Right. So with this, moving away from the banking space right now, another aspect right now that we're considering is the insurance sector. You broadly mentioned what needs to be done. However, do you think there needs to be more tax incentives to increase better insurance protection coverage and penetration in the country?
Yeah, so I think insurance is one of the protection is one of the sub segments of the whole insurance sector, which is still quite under penetrated, and there's huge opportunity in India. As and when people do become financially aware of the risks, then the general expectation is that they would start buying protection, and over the long term, the protection prices should come down. Given the kind of competition that we are seeing there, and the kind of margins that the protection products have, so I think reducing the GST rate from 18% currently to more lower levels, that would definitely encourage more participation in terms of demand from the end users, and that would help improving the protection penetration in the country.
Right. And Raghav, anything else you think that we've missed for the financial sector that you think needs to be considered and would be considered during the budget, which could be beneficial as well?
No, I think the only important point that I wanted to mention, which I mentioned briefly in the opening statement, is that the public sector banks need to be given capital, because they may be well provided for on the legacy
Mm.
stress, but the kind of NPAs that we could see, and the kind of and if they do want to pursue growth going ahead, then they do require quite a bit of capital in order to provide comfort to the investor community out there. So that's all that I wanted to mention.
Raghav, one follow-up I would want to take on the bank recapitalization front. Any numbers that you are taking into consideration that the government or the RBI could consider?
No, not right now, but my understanding is that it may not be a very large amount. I would not be able to comment on the quantum, but my expectation is that it may not be a very large amount.
Right. All right, Raghav. Thank you so much for getting us insights for the BFSI sector as to what announcements could be expected. And I'm hoping to speak to you once the announcements are out to analyze as to how they will be impacting the sector on the positive and the negative side. Thank you so much and stay safe.
Thank you.